Hello, fellow and future traders. Welcome back. Or if this is the first video you're watching, welcome to the Forex Trading Academy video series on how to trade. In this video, we will be going over the basic functions of the platform. We'll be testing out the different buttons, what they do, kind of catching up. You've already optimized your platform to make it look similar to what I have showing on the screen. So in this video we're going to be going over what each one of the buttons do and how to use them. So let's get started. So let's just open up our browsers and sign in. Go to my account. Some people make the mistake of trying to sign into fxTrade. They don't pay attention that there's a tab. If you've been doing that, it's okay. Every once in a while when I'm tired and I'm logging in, I do that. So just go ahead and click on fxTrade practice and sign in. All right. So this is going to launch the platform automatically. We had the little box checked for it to launch it, and this should be what you see right when you get into your platform every time, as long as you always save your profile. Under tools, it's save. So anything that we do, anything that we've done in the last video, I don't know if I mentioned that it's important to save. Otherwise, you'll have to do all of that over again every single time. So just save your profile, or you can hit F12. That's the shortcut. So let's get started. Basically, we went over a few of the buttons across the top. We kind of stopped at tools and optimized using the view font size color scheme and user preferences. But let's go over in depth what each one of these buttons do. And we're just going to go through it systematically from kind of the top down and just go over, just kind of orient you to the platform. Again, this is fxTrade practice, OANDA. Connection, disconnect, lock, quit. We went over that last time in the last video in the platform setup. Account, buy or sell. This allows you to actually enter a trade. If you click on this, it will allow you to enter a market order or a limit order, and we'll go over those in future videos. What exactly a market order and a limit order is. This particular video is dedicated to what all of the buttons do. So you can switch it between buy and sell. The market that you want to get involved in, in this section you enter the units. Because we deal with two different currencies, you can't say how many dollars do you want to trade, how much, how many euros is it. It could deal with your base currency, but our balance is quoted in US dollars here, but we're not going to be doing that actually. It's going to be units. So everything that you see when you're trading, it's units. How many units do you want to enter? Because it might, if you're buying, it's always the first. It's always the first of the two that is being bought. If you're selling, then it's always the first of the two that is being sold. And whatever you do on one side is the opposite on the other side. So if you're buying Australian dollars, then you're also consequently selling US dollars. Going back or going down, the quote, price, pips, you can in any of these boxes that you check, you'll either be selecting price or pips. And again, if you don't understand what a pip is, or you don't know what the price is, that's okay. We're just going over all of the buttons and what they do. Selecting upper bound, lower bound, your take profits, your stop losses, your trailing stops. This would be a good time to go into each one of those, but I want to make a dedicated video to that in the future. Going into all of the sort of vocabulary of trading, kind of a dedicated video to explaining what pips and bounds and take profits and stop losses and trailing stops are. So, limit orders, this is how you enter a limit order. It's a little bit different. A limit order is simply a entry or exit from the market at a designated price. A market order is an entry or exit at the current price, which is why you have a quote here, which is the price. That is your current price. The market's closed right now. It's the weekend, so we can't enter or exit trades. But limit orders are what price we actually want to be at. So we get to designate the price in which we enter and exit. And so those are the two types of orders. And here, if you submit your limit order or if you submit your market order, you can keep it open until it's fulfilled, or you can designate when it expires, and you can set those in the default. So close out the window. That's the first button. Close all. This is kind of self-explanatory. If you have open trades, like I have one here, I sold right at the bottom. We saw a big dip, and I entered right at the bottom, kind of for training purposes, but also I was hoping it would go down further than that. I thought it was going to continue to drop off. So let's take a look here. Close all. If I select close all trades or close all orders, again, a market order or a limit order, these are orders. These are types of orders. If you were to close all your trades, that would be anything that's open, any kind of existing open trade. And orders would be any kind of future, maybe limit orders or take profits or stop losses. So also they allow you to close all profitable, and then they also allow you to close all unprofitable trades. So you can exit in a couple of different ways. So full transaction history, this brings up a separate window that we'll go over in a really, really detailed kind of, I don't know, kind of, it's everything that you do on your account, and you can kind of, really, there's a ton of information to go over in your transaction history, and as we experience more with the platform, you'll understand what a lot more of these selections will do. So the ticket number, MT4 ID, that's for MetaTrader 4. Transaction, what type it was, the currency pair that you're dealing with, price, what you entered at, the amount of units, if you had a stop loss, what was it set at, take profit, so on and so forth, all the way down, and you can kind of see across there, and you can just filter it different ways, and it'll just update. It's a transaction history, so I mean that's pretty straightforward stuff. Next is the account details. This kind of goes back to your original where you sign in. It looks that is your account details. It's the same. It's what you have currently available, and allows you to add or remove funds or create a sub account. One of the good reasons to create a sub account is if you want to test out multiple trading strategies at the same time. You name it like, moving average convergence divergence or something, or a slow and fast crossover, or whatever you want to name your sub account, and then you can test specific rules for that strategy where it won't affect your primary account. As far as I know, that there are unlimited amounts of sub accounts, and I think you might even be able to create sub accounts under sub accounts, so it can get really nested, really layered. Um, so that's the account details, and you can see the create sub account down here as well. Account statistics. This is an interesting one. Trade volume. This is a really good quick reference for how much you've actually done. If you reset, I reset my profit and loss every time I start a new strategy, and also every time I start a new video series. But trade volume, how much you've actually done, you can refresh this. And it kind of gives you, the profit and loss is nice. It gives you how much you've done in the week, the month, and the year. Sometimes it's hard to keep track of that stuff mentally. You always have your account balance to tell you, but maybe you're down for the week, but you're up in the month and the year. Or you're down for the whole year, but you're up in the week. And so it's just nice to have a quick reference for your account statistics. Change password, self-explanatory. Enter your old password or your current password new and confirm your new. A lot of these are self-explanatory. It's just nice to see what pops up. You won't break anything on the platform. There's nothing that you'll do that can't be undone. There are no permanent changes that you can make. Like, for example, resizing a window. It's never going to stick and not allow you to resize it again. And that goes for anything. If we're dealing with, changing the way our chart looks, or we're changing the graphing, or the just whatever's available, you're not going to break it. So let's just mess around. Click on the buttons yourself and see. I just want to explain what these different buttons do, so that you have a reference video if you ever forget, what was that again? What if I add or remove funds? What does that do? Well, it is pretty self-explanatory, but seeing where it takes you and then how to change the stuff, we can submit this right back to 1,000 if we want. It would be nice if we could do that on our live platform. Just enter a number and be able to trade with that, but you have to deposit actual money. So that it doesn't hurt anything to just play around. Reset profit and loss. It's a useful button. Like I said earlier, when you're trying new strategies, it's really useful to reset your profit and loss and kind of start the experiment fresh. It's the way I view any type of trading strategy is it's an experiment. It's an experiment. You can have all of the analysis done and have a really, really solid risk to reward ratio and have a really solid, entry signal and really solid trade management for exiting your trade and realizing your profits or losses. And when you go to apply that, you're going to be introducing the largest variable, which is the human variable. Are you always going to take every single available signal for entry? Are you going to exit when you're supposed to? Are you going to get freaked out and exit too soon? Or are you going to get too prideful and exit later than you should have and hold on to a loser or cut a winner shorter? There's so many different things that can happen. It's nice to be able to reset your profit and loss, and it just warns you here that it can't be undone, which is fine. It's one of the things you're resetting your realized profit and loss. That's what you're affecting there, and that's just kind of a running total of your overall trades. You might add more to your balance, but really the best part about it is being able to reset that and try a new strategy. That's when I recommend to reset that. So changing leverage, pretty straightforward. This allows you to select the leverage and then submit it. For our purposes, we'll be at 50 to 1, and we'll go over that in future videos. What exactly is trading on margin? What is leverage? This is all under the account tab. Log in as another user. That's straightforward. If let's say a friend comes over and they have a demo account that they want to show you some of their platforms, some of their setups, all of their indicators, all of their chart setup, everything will populate into the platform when they log in with their information. So it's kind of nice just to be able to switch that easily without logging out, logging into a different account, and coming back in. So let's say create a sub account. This will be under your primary account. Again, you can name it. Say you want to do a MACD, which is moving average convergence divergence. You'll select your base currency. We always use the US dollar, the leverage 50 to 1, and then how much your starting funds are. I like to do 1,000, but if you want to enable this account for use with MetaTrader 4, that's a completely separate platform. The instruction videos that I'm going to be focusing on here are, and with the rest of the Forex Trading Academy videos, they will be all dedicated to the fxTrade platform, OANDA's proprietary broker platform. This is their design. MetaTrader 4 is kind of a generic, I guess I don't know if there's a better way to say it. It's kind of a generic. It's used by a lot of different brokers use MetaTrader 4, and they allow their accounts to be linked into the MetaTrader software. And there are a lot of advantages for MetaTrader 4. Here it explains that MetaTrader 4 is a trading platform that supports automated trading strategies and a range of customizable graphs and indicators. So one of the weaknesses as compared to MetaTrader 4 that fxTrade or fxTrade Practice platform doesn't have is the ability to use scripts or bots or robots or automated trading, whatever language you want to use. It all describes the same thing. They are scripts that tell the platform when to enter and exit, and you give it a set of rules. And I'm oversimplifying it here, but that is at the base what it's doing. It's a program essentially that you can execute, and it allows it to trade while you're not around. And we see this a lot with high frequency trading, and we see this a lot with this even exists in the stock market. Some larger companies allow automated trading, and it is truly automated, where there is not a person controlling it behind it. It's an algorithm, which is just a set of decisions. It's just a set of functions of input and then output. So if this condition is fulfilled, then do this. It's an if-then scenario. So that's what automated trading is. That's what the MetaTrader platform enables, basically. And so you can add a new account, a sub account, and enable it with MetaTrader 4. You can also enable your primary account for MetaTrader. I'm not going to be submitting this. I don't want to create a sub account now, so I'll just cancel, and we'll move on. The next section is, we went over this extensively in the last video, so I won't backtrack and double track and go over it again. These are the one I didn't cover last time, is the pip profit calculator. So this allows you to kind of, I mean, as it says, it's a pip or profit calculator. what it's giving you is some assumptions, where the price is going to open, where the price is going to close, and how many units you trade. It tells you right at the front that 10,000 units make 1 pip equal $1. And the reason for that is very simple. Currencies are traded at the 4th decimal place, so 1.3623. There's this smaller decimal place, or this smaller amount, that's called a pipette. This out to the 4th decimal place, 1.3623. So 3623, that 3 is a pip. It's a percentage point. It is the smallest amount at which a currency can be measured. That what many brokers have done is actually given more granularity by adding one more decimal place, but these aren't official decimal places. These are just within a given broker or a given platform. Officially, they only go to 4 decimal places. The only difference is with this Japanese yen. It only goes to 2 decimal places behind, and then with the 3rd being the pipette. So that's the only exception to the rule. Every other currency is measured to the 4th decimal place, and that literally that just means 0.0001. That's the 4th decimal place, and that 1 is 1 pip. So what they're saying here is if you trade 10,000 units, 1 pip, or that 4th decimal place, the smallest that it can move, will equal $1. And the reason for that is also, like I was saying, is very simple. If you take 10,000 and you divide or multiply it by 0.0001, it comes out to 1. So every 10,000 units that you trade makes 1 pip equal $1. So, a little quiz. How much would it be if we traded 20,000 units? How much would a pip be worth if we traded 20,000 units? You multiply it by the same factor. So multiply that by 0.0001. Oh, 0.0001. And if you're able to do this in your head, it's great. It's 2. So 1 pip would equal $2. So it's really just a volume game. If you're able to trade more units, each pip will be worth more. So if 10,000 is worth 1 pip equals $1, then 100,000 makes 1 pip equal $10. And 1 million makes 1 pip equal $100. So this is the pip calculator. This is the pip portion of the pip profit calculator, and then the profit and loss is based on your numbers you enter here. If you buy the euro US dollar with 1 million units and you open at this price and close at this price, how much would you be gaining or losing? How much would you profit or loss, profit and loss, equal? And this is really just based on the numbers that you enter. So it's just telling you, a real simple way, and it just updates it. You can do this on a calculator. You can do this after trading in the market for a significant amount of time. You can just do this in your head. If we know that every 10,000 units make 1 pip, then if we're trading 35,000 units, we know it's $3.50. We're just moving the decimal place over to 4 spots. Makes it kind of easy. So this pip profit calculator, I don't use it very often because it's a what if type of scenario. What if I sold the US Canadian dollar at 1.08616 I opened the position at 1.08616 and I closed it at 1.08683, and the amount of units I was trading was 35,000. What would I gain or lose? And it tells you 21.5765. And this is just raw. This is not accounting for the spread. This is just the raw numbers between these two prices. And if you bought, it would be that amount. And if you sold, you would lose, you would have lost. So that's all the pip profit calculator does, is it gives you a what if scenario. What if I did this with this many units? What would I gain? Well, it tells you for the US Canadian dollar, 10,862 units makes 1 pip equal 1 US dollar. For the Euro US dollar, 10,000 make 1 pip. Anything that the New Zealand, anything that is that the not US dollar, anything that the is a different currency quoted first. You have these four that the alternate currency is quoted first, and then these three, the US dollar is quoted first. On these four, it's going to be the same. 10,000 units are going to make 1 pip equal $1, and you can see that as we go through the different currencies. Where it changes is with the Canadian dollar, Swiss franc, CHF is Swiss franc, and JPY Japanese yen. So with these, you get a slightly different amount because the US dollar is quoted first. Some will be more, some will be less. And it doesn't matter if you buy or sell. The Australian dollar, if you buy or sell, it's 10,000 units make 1 pip equal 1 US dollar. When you get into these sections where the US dollar is quoted first, it does matter whether you buy or sell, and it makes a slight difference. So that's the pip profit calculator and a couple extra teaching points thrown in for good measure. Let's move along to we went extensively through the US the user preferences. Now I'm going to go through each one of these buttons. Draw horizontal graph line, draw vertical graph line. Selecting these on or off only changes your crosshairs when you're hovering over the chart. So if we don't want those and then we apply it, it doesn't draw them. That's all those are. It's kind of misleading because it would make you think that it's actually changing these, vertical. It's actually the cursor graph lines. This allows you to kind of, place your horizontal and kind of measure across. Was that a support or resistance, and just kind of lets you float anywhere. Over on the side here, it's going to tell you the price, and across the top, it's going to be time. And that's all the chart's representing, is price change over time. So when we're looking at the graph, that's all it really is. Time and price. So the information box, what is the information box? Right down here in the lower left-hand corner of the chart, or if you hover over it, it jumps to the other side. What this information box is telling you is whatever bar that your vertical line is placed on, it is going to tell you the information about that particular bar down here in the lower left-hand corner. So basically, if you're looking at this particular bar here, the May 16th bar, it's going to tell you the OCHL prices, which stand for open, close, high, and low. Now, if you change your chart type, which we'll get into later, if you change it to a different type, the information box will change for the chart type that you have selected. So that's what the information box is. If it ever goes away, like it did there where we selected something on the chart, and you can find it usually tabbed out behind your in your windows. And if you're using Mac or Apple products, I apologize. This isn't geared towards Mac users, but it should be really similar. I run Windows 8, so that's just the nature of the beast. That's what we're going to be talking about. So auto extend trend lines left and right. So what does this do? Well, first we have to understand what a trend line is. And the way you select a trend line is here. And you can see that when you hover over a little button, it'll tell you right around here what that button is going to do. Draw the trend line. So a trend line is basically just a line that you're drawing on the chart to kind of indicate a trend. And there are things that you draw yourself. There's also indicators that are populated. You know, this is just going to show that there's a downward trend. So from May 21st to May 24th, we had an overall down. You can see this just by looking at the chart, but sometimes it helps to have a trend line. Another nice function of the trend line is that they updated the platform to start showing how many pips per hour or pips per day, or different units depending on the time frame that you have selected. And we're going over a lot of information. I just want to stick to mainly the user preferences, or the buttons and what all the buttons do. So this is also just a quick overview into all of the functionality. And if you feel overwhelmed, it's okay. One of the primary ways to engage with the Forex market is through deliberate practice on a practice account. You need to know what all these buttons do. You need to. One, to be able to use them if you want to, and two, so that you're not lacking in any knowledge that could potentially provide a profitable trading strategy for you. So what do auto extend trend lines left and right do? If we auto extend them and we apply that, what we're going to see is an automatic extension, obviously left and right. And if we add one up and down, that's going to auto extend it no matter where I click, completely vertical or left and right across the. So the difference between that is if we don't have those selected, then it only goes to where we actually click the trend line to measure or to populate. So with that, we will remove the, whoops, I don't want magnetic, I want to remove all of the trend lines. Okay, so going back to the tools, user preferences, magnetic trend lines, what do these do? Well, if we have magnetic trend lines, it will actually stick to the price. And if you want it to populate right on that candle or that wick, and then right to that, it sometimes makes it easier if you want it to stick. You can still move it after it's created. It's not stuck, like it's not permanent magnet, but that's what a magnetic trend line does. Is it, as you move left and right horizontally over time, you're changing your time, it is sticking right to the price, and then that allows you to click and select your trend line directly to price. Now if we don't have that, again, you saw what happens if we don't have that on. we actually can just click anywhere and set a trend line. And it's not magnetic, it's not sticking to each one of these prices as we move left and right. We can select it anywhere we'd like. So next up is the default trend line color, self-explanatory. We can change it to anything we like. Black tends not to show up on a black chart, where white would not show up on a white chart. So if we want different trend lines to mean different things and are different styles, we have 4 styles to choose from: line, dot, dash, thick. So if we wanted a default green dashed, I forgot to apply. Let me apply that. We want a green dashed trend line. That's what it would look like. And so you can populate, kind of create your own code of trend lines and have them mean different things and have them represented by styles and colors. A lot of customization available there. Next up is the weekend and market close data, to ignore it. And if we do that, this is a perfect time to show this. If we do that, it will actually take out all of these dashed lines which represent weekend time. And we can set the start time for when it starts and ends. And if we hide that, there's 2 different things. Ignoring it when you're using indicators, when you're using, let's say, a simple moving average, period 14. And if you don't know what all that stuff is, again, it's okay. We're going to go over that. So don't freak out. Just keep watching the video series and we will cover all of how to trade Forex. All of it. There shouldn't be, by the end of the video series, anything that's left out. And if you do have questions, it's okay. Just find us on Facebook and write to us your questions. How do I do this? How do I do that? So the ignore weekend and closed market data, you're going to see that this moving average is taking into consideration these time periods where it flattens out, and it kind of ruins the moving average because we only want it when the market's open. So if we apply that, it actually ignores a big chunk of that. Now if we hide it, it'll become even more clear what's going on. If we okay, that's interesting. Okay, there we go. If we hide it, now we don't see any more dashed lines, and our chart is now only showing us relevant data from when the market was open. So by selecting that or deselecting, let's say we just don't want to hide that data, then it's still going to ignore it as far as our indicators or our moving averages or whatever other overlays that we're using, but it's going to show it. So there's a couple different layers. The usefulness of that for some people is, again, when it comes to indicators, they don't want the weekend to skew their data. They only want to see it when it's open, when it's moving. And the other way to do that is to just keep it on or keep it hidden or keep it ignored and hidden. That's the way to do it. So, I don't want to save that. I don't want to save that. No, I want to save that. So I like having the weekend data available. It shows me kind of the periods in which the market was open and closed and kind of what it did over the weekend or week by week. Gives me in week chunks, and I like to see that. I like to see that movement. It's preference. It's preference, and it also might affect your indicators and your trading strategy. So next up on the user preferences is the quote chart. We went over this. You can always reset back to the defaults on every single page. This will actually reset your charts to the defaults, which you can see that it'll repopulate the entire quote list, all of the default periods, all of the default sections. Just selecting restore defaults restores the defaults across all of the panels, or all of the preferences, user preferences. So I don't want to restore the defaults. So we'll go back into quotes. We messed around with this quite a bit. If you wanted to reorganize and reorder, that's how you would do it. If you wanted the Australian dollar to be a little bit lower on the list and you want your euro to be on the top, you don't have to go back in and reselect all of them. You can just move them up and down that way. I like to keep it in this order: Australian dollar, euro, Great British pound, New Zealand dollar. That's alphabetical, and then those are all the four that are quoted first, and then these three, the foreign currency, because I deal in the US dollar, the foreign currency is quoted second. So you have the first four that are quoted first, and then the second four that are quoted second. The only other method that I would say is okay is to put these next to each other, and the reason why is Australian dollar and New Zealand dollar have a high level of correlation, and the euro and the Great British pound have a high level of correlation. You can see that when we have multiple charts open. You can see kind of their chart patterns matching. But I like to have them in alphabetical, and then what I would recommend is not to change around your platform a lot. And this is just a preference recommendation, really. The reason I recommend not to change your platform around is so you can get used to it. So you know where all the buttons are, so you're not making mistakes where you're losing things. There are a lot of things going on, and if you can set it and then learn it from that point, it will be a lot easier when you do make a change, because you'll know exactly what you're changing, and it won't become foreign all over again, and you have to relearn a whole bunch of stuff all the time. So just make little changes. Start with this. I recommend this setup to be the basic setup, and then this quote list. All of these buttons are self-explanatory. This is the basic setup. If you want to remove or you want to add, we just remove the New Zealand dollar. Again, there's nothing that you're going to break. There's nothing that can't be changed. If you wanted to add all of them and you wanted to see what that was like, well, this is what it looks like. If you have all of your quote panel filled up with every single possible currency. Back to user preferences, remove all. And then instead of applying that, you mess around, you get to see. Instead of saving it, you get to cancel. Or we'll just go back through Australian dollar, euro US dollar, GBP USD, Great British pound US dollar, New Zealand dollar US dollar, then the USD CAD, USD Chief, and then the USD JPY. Canadian dollar, Swiss franc, Japanese yen. We add those, apply that, we're right back to where we started. So you can't really mess it up. Periods, same concept as the quotes. The time periods, this might be a good section for a quick lesson on the time periods. Basically, very basically, if we're looking at a single candle, this is the candlestick chart, this is the beginner's chart, or not beginners, but the default chart. If we're looking at a single candle, it is going to represent the amount of time in the market that we select. And there are a lot of sections that you can select. So if you wanted to edit it from here, you can edit it and it brings that up. You can edit that and brings that up. And if you can't edit that. If you want all of the time periods, what this will allow you to do is select any one of the chart representation. So let's say this time right here, which is 1800. We can see that because of our crosshairs populating it up at the top on May 22nd. 1800 May 22nd. If we drop down, say, into the 5-minute chart, looking for 1800 on May, this is I believe May 22nd. We're in May 22nd now. I just want to verify May 22nd. So you go forward to 1800, which would be right here, 1800. Now, because the time is, the bars are split up into 5 minutes, 1800 is not just a single bar. It's actually a series of bars from this point to this point. Now watch what happens when we go back to our 1 hour chart. It squeezes these lines, these vertical trend lines that I put to show that this really is the representation of that hour. Now if we go into 10-minute bars and then we go back and look for our trend lines, our indicators, these two lines indicate the 1800 hour on May 22nd. And so it's just going to break your chart up into whatever time frame that you want. So in an hour there are 6 10-minute periods. So there are 6, 4, 5, 6 10-minute bars, and this is the first 10 minutes of 1800, the second 10 minutes, and so on and so forth. We drop down to the 5 minutes, and there will be 12 individual bars. The reason I call them bars, you can call them candles or bars, or if you're switching to different chart types, they'll be represented different ways. So this is still 1800, and it's still 5 minutes. So every bar, every vertical bar represents 5 minutes in the market. You can go down to 5 seconds. We don't have enough history to go back 5 seconds. This doesn't go back. But when the market's live and you have an updated feed, you can look at it kind of, you know, any one of those ways. This breaks the market down into segments of minutes, and so on, all the way to weeks. And there's our indicators showing the tiny section when we make one candle or one bar represent a week of movement in the market. So that is the time frame section. That kind of explains the different time frames, and we can see that the lines here are a portion of that hour period that we outlined. So let's go ahead and remove those and move on to the next section. User preferences, periods. We'll go back, we'll remove all of them and just add each one of the ones: 1 minute, 1 hour, 1 day, and 1 week. Apply those, save it, and that updates our selection list. Okay, so we'll keep on the hour view, and we'll look at the next section of user preferences, the trading. So that's a number of things going on here. The trading tab, they can be customized by market. That's a little reminder here. Be customized by market. If you want different types of settings, default settings for different markets, you can select any one of them that you want. So when you're using that, you have to select use the custom settings for that market. But we'll just be setting up our defaults. Default order size, you can do percent leverage net asset value, or in US dollar units, percent leverage net asset value and US dollar. And then you would select that. So this is the kind of the unit, and this is the amount. So if you're doing it in price, then you're going to be selecting your price or your pips, or your percent net asset value, your percent of your balance, or your US dollars. And those are kind of the options on this side. Except for the last one, default limit order duration. So when you have a market order, or really a limit order, rather, you can allow it to only stay open for a given period, a given amount of time. And if you want that limit order to be executed within the hour, and if it doesn't go within the hour, then it gets canceled. Then it no longer stays on your platform. It'll just automatically delete it if it doesn't get fulfilled, and then all the way up to 3 months. So we'll go over all these in a later video, what each of these things are. Order size, kind of self-explanatory. That's how many units or how many dollars or so on. Bounds, stop, loss, take, profit, trailing, stop. We'll go over all of those. Enable bounds by default. Any of these things that you might designate. Say if you always wanted a let's say a 20 pips stop loss, and you wanted it populated always, then you enable stop loss by default. So you can select whatever you want up here and then enable it down here. And whatever your trading strategy calls for, let's say your take profit is 20 pips, or your trailing stop is 50% of your balance, whatever that ends up populating, and then you enable it by default. We can't execute trades right now to show you what it looks like when you enable it by default, but when you execute a trade, when you enter the market and you have these enabled by default, it will populate those orders, whether they're stop losses, take profits, trailing stops, or bounds. It will populate on that trade. So for example, if I would have had a 5 pip stop loss, it would have populated 5 pips away from the entry, and it would do it automatically. And it's pretty useful to set those up, to set those bounds up, or to set those orders to populate automatically. We went over the confirmation windows. We went over the one-click trade tooltip. That's just this tooltip here, saying how many units are available, so on and so forth. Position reversal, one-click trades, show one-click trade tooltip. Those are pretty straightforward. The local of your account, the local user preferences, is just language, time zone, And then your number format, which is interesting. You might have different number format given for, let's say, Qatar. That's a different number format where the decimal place goes. And I'm just going to stick with the United States. Apply that. Sounds. These allow you to select when any one of these events are fulfilled. It allows you to play a wave file, kind of an auditory alert, letting you know one of these events was, or multiple. Anytime you get interest, you can have a interest sound. Anytime you have a margin closeout warning, you can have an alert, like a siren or whatever you designate. You make them all cartoon sounds or video game sounds or whatever you want. It's completely preference on that for your auditory alerts. Kind of like ringtones. When something happens, when a specific person calls in, that's what we're setting up here. In the miscellaneous section, dual bid ask columns, color-coded tables. This is mainly going to deal with things up here in your trades or your orders or your positions. If you select dual bid ask columns, you're actually going to see that reflected in your quote panel. And you can see that, sorry, looks like if you have your one touch trade enabled and you select dual bid ask columns, it's not updating. Okay. In your quote panel or your quote list, you can see how it updates. Instead of 1.3623/363, if you show the dual bid ask columns, it will actually give the full number. In the quote panel, it should be doing that as well. I guess it already is separated this way, so it's something that they changed. So color-coded tables, when you have trades open, let's say if you have any kind of longs and shorts, and it'll actually color code those tables to your preference. So here, if we take off color-coded tables, you can see how that changes. If we have color-coded tables on with activity, you can see that kind of highlights a sell market, a stop loss. It kind of gives you a visual representation of the activity or the exposure, short, long, positions, and so on. And it just kind of breaks it down and color codes them. Full word filter. This allows you to, if you have your filter available, this allows you to filter out using entire words. So it requires a one-to-one match, meaning if you don't have the full word filter on and you filter, let's say we want short positions, it'll include everything with all the S's, all the H's, all the O, R, T. If you have the full word filter turned on, then it's only going to return what the full word was. So short, it will only appear when the entire condition is met, which is the full word. Long, for example, and we can see this kind of we can see this, let's say USD. It'll only return once the full US. Once you hit the D, then it populates with everything with that full word. So that's kind of a change. If you want to use your filter, I don't filter anything. It's also helpful for news. If you wanted to filter out specific news, it is a useful tool for that. For example, if you only wanted, let's say JP for Japan, so you select JP in your filter, and it will return the result of everything with the JP. So let's say we wanted retail sales, only the retail sales. Now it's going to give us the retail sales of everything. If we only wanted things from March, then it's only going to return from March. And GDP is another popular filter, just to see what's coming up for the GDP. NFP, non-farm payroll, not showing anything. So that is the full word and just the regular filter. Now apply, and we'll remove the filter. And sort sub-accounts and show sub-account switcher. In the accounts, you can enable to switch instead of just log in as another user or create sub-account. There'll actually be another section down here that will allow you to switch to your different sub-accounts straight from the account tab. Since I don't have any sub-accounts, these aren't highlighted or able to be changed. Your default account, this is if you have multiple sub-accounts and you want to always log in, let's say with your primary strategy, or like earlier in the example was the MACD, I was going to create that sub account. You can select the different accounts that will automatically show up, and it'll automatically go to that sub account or that default account when you log in. Lock screen after how many minutes? 0 for never. It's useful if you get pulled away a lot and you have kids around. It's good to just lock your screen, and that's the same. It's the same thing. This is what will appear when your screen locks. And I'm not even highlighting it. There we go. So that kind of covers all of the user preferences. The next section is to save the profile. Any changes you make that you want to be permanent or you don't want to have to make the next time you log in. Save your profile. Profile manager. You can actually save, if you wanted, let's say, a white chart with a bunch of indicators and a bunch of separate time periods, and it's always the average line. However you want to set it up, you can set up separate profiles and assign them and delete them and save them, and that's the entire profile managing tool. So if you have different setups, let's say for the Australian US dollar, and instead you don't want to look, you want to look at the 1 week, and you always want it to be zoomed out as far as you can, and you want it to be always the open, high, low, close bars. then you would save that current profile as, we'll say, AUD, Australian dollar. And then that profile, you can either switch back immediately into that that specific profile. You could think of just as a grouping of preferences for a given, you know, maybe strategy or a given currency or a given that will it'll just automatically populate your browser with that, and then you can manage those. Let's say I don't want the Australian dollar one anymore, so I'll delete the marked profile. Yep, I'm okay with it being permanently deleted. Close this window, and now we no longer have that as a selectable option. So the next section is resources. So these are outside. Anything that you're going to collect or click on under resources are going to be, generally it's going to take you to an outside link. Technical analysis powered by AutoChartist. This could be a whole 2-hour course on its own, because what it sets up and what it allows you to do, it's a very robust technical analysis tool that will maybe show even experienced traders things that they hadn't caught in the market, with chart patterns, different Fibonacci patterns and key levels, and a lot more than the scope of this video. But that's what you get when you are selecting that reference tool, the technical analysis tool. And it kind of gives you a agree or disagree type of thing. A little warning at the beginning saying it's not going to guarantee you profits. News, very helpful. I think this is powered by Reuters, unless they changed it, or a collection of different. Yeah, you got UBS, yeah, Thomson Reuters, and Dow Jones. These are all the news events, and if you're doing fundamental analysis, incredibly helpful to just take a look at what's coming up, what has happened, the release, how powerful certain things are, and there are a number of outside resources that you can use to get the same thing, but this is just built into the platform, gives you a direct connection to it. Also, this is very it's very robust. I mean, you can get pretty much everything you need news-wise that is dedicated to foreign exchange and the foreign exchange market straight through this this reference or this resource tool. This combined with other things is only, I mean, it's not a drawback. It's just makes it better. So resources, technical analysis and news, and then UBS fxTrade and research. Another reference tool, and they kind of give you very timely, very relevant. You can see that that they're broken up into kind of two categories: fundamental strategies and technical strategy. You can see overall it's very heavily weighted currently towards the fundamental strategies. And if you read any of these articles, it kind of gives a purpose behind it. And if you really want to get into the depth of this specific UBS research, this specific type of this specific provider I'll say, of research. They provide good stuff. Also, it's just good reading if you want to just be aware of movements. Japan, um, usually during the article somewhere, they'll say it's a belief. It's not a, it's here's what we think and here's why we think it. And that's kind of what the UBS research resource tool is. The economic calendar, pretty straightforward. Gives a nice, easy to read, I mean, we're looking at what, May 24th currently, so you kind of zoom down and it shows you in an easier to see format than maybe this format. What's important, what's not, how much of an impact will it have. Seeing this, looking at all the upcoming news events, given little icons, flags of the related countries that it will affect. Just another resource. It's just another tool that they provide free of charge. Again, this is fxTrade practice. There's a lot of stuff to sink your teeth into. As far as technical or fundamental or news-oriented type of trading, there's a ton of material. This can be a full-time job just keeping up with it. Interest rates. So this is an interesting tool. Interest rates, no pun intended. You select a range, you select your currency, and then if you want just a balance or a trade. Let's say we want to select the interest rates for current, and then if we started January 1st, 2014, and the end date, let's say, was today, 2014, and the currency was the US dollar, and it's just going to be a balance. We're not going to be doing it in a trade type of interest rate. It's just what we have in our account balance here. So we'll just check that out. And this is what it returns. The currency is USD balance, bid, ask, which bid, ask, these are the two different types of prices, sell, buy, bid, ask. It's 0.1. And so what does that mean? If we go into our activity and we see interest US dollar on the balance of 1,000, the fxTrade practice even simulates what you'll be gaining on interest. Also, that's balance interest. Trade interest is the difference between the currency that you're buying or selling and then your base currency or your currency pair. So you have two different types of interest going on, and that's another video by itself. Suffice it to say that this resource allows you to check out what the interest rates are, and you can go historical. You can go back to see what they were at different times. So the next section is trading forums. It's a really useful tool. If you have questions specifically about OANDA or their platforms, you can see Forex traders, new and novice, experienced and pro, in Spanish, politics, currency trading, emerging finance, e-commerce. Tons of different topics, tons of different posts. It's a very timely and relevant and current forum. A lot of forums that you might read are outdated. Even 2008. If you're seeing a post in 2008 and it's something about a currency and what's happening with the currency, that's way out of date. Um, this stuff stays pretty timely and relevant. So again, another resource to just go peruse and even ask questions specifically to the platform or different traders, or if you just want to talk about um, random topics. So that's what you get when you select the trading forums. Spread statistics. This resource, it tells you here how to use this chart and then how to read the chart. So I'm not going to go over those two things. This is what you're getting. The important thing to know about OANDA's spreads is that they're dynamic. First of all, what is a spread? The spread is the difference between the sell price and the buy price, or the buy price and the sell price. And it's represented here, right here in the middle. That is how many pips this price is above this price. And that we can see represented this way. The current price for the buy price for Euro US dollar is 1.36363, which is 1.36363. That's this line. The current sell price is 1.36238. That's the sell price here. That's this line. So the top line is the buy line and the bottom line is the sell line. The space between that is called the spread. And that spread we can see here is 12.5. This is one of the most important numbers to a trader, because it is in Forex, and specifically with OANDA, it is the only obstacle that we have to overcome. In order to start making money in Forex, you have to overcome the spread, and then once you do overcome that and the trade is in your favor, then you're making money. And so it's incredibly important to know what the spreads are. And you can see here, in keeping with our value of transparency, they publish their spread. And the reason for that is they recently switched to dynamic spreads, meaning throughout the day it fluctuates pretty regularly. I mean, every couple of seconds it seems that the spread is changing. They used to have fixed spreads, where only during a period like a news event that was expected to have increased volatility, they would increase the spread and then it would decrease, and it looked, instead of real jagged like this, it looked almost square like. It would look kind of, it would go up and stay that way for a little while and then go right back down, and then it was just kind of flat, go up, stay that way for a little while, go back down. You can see that there are regular times that this spread spikes. And if we want to see the minimum and the maximum, it's really important to see. They'll show you the average, which is nice. You know, the average is nice to see. But really the minimum and maximum are going to show you kind of the range. And during Thursday, May 22nd, it went up to 15 pips. And if that's the obstacle that you have to overcome in order to make money, that means price has to travel in your favor 15 pips before you can start seeing a profit. Now, the nice part about that is that's the only obstacle that you have to overcome. And it widens during the weekend, and then during most of the time, I mean, you see that the average spread is 1.1, or the average goes up to 2.2. It's really not that much. The average, what they're claiming is with dynamic spreads, the average is actually lower, but it fluctuates so much, it doesn't seem that way. It used to be just zero point 0.9, less than a pip. You just have to make up less than a pip, and then you could start making money. And then when high periods of high volatility would come in, you would see an increase in the spread, and that means that the broker's getting a bit more from you at that time. It's not a commission, but that's how the broker makes their money, is through the spread. It's kind of like a table rake at a casino poker game. They just host the game and then they rake a little bit. This is raked off of every trade, so that's kind of the resource that you're looking at. One of the primary ways that brokers compare how good they are relative to each other is using spread statistics, or using or saying we offer the lowest spreads. Again, because it's the only obstacle that you have to overcome. That's a really good selling point. If you have incredibly low spreads regularly, and you don't see as many spikes, or they're not as high, or your average or your maximum isn't going up to 15, or that's a good selling point. The next resource is the Forex order book. This is it's just another tool or resource that OANDA provides to just show you how many open orders and positions are held by their clients. There's an entire video tutorial you can watch here that explains how to interpret this. It's a useful. You can build a trading strategy off of this information that is provided, and this kind of these tables summarize the differences, and it's a great video tutorial to watch here. There's not much more to say. If you're interested in knowing where people's positions are, where the bulk of their positions are, it looks like here, open positions, a lot of people went long at 3,700, meaning a lot of people bought at 3,700 for specifically, and it's kind of small, but specifically for the euro US dollar. And then open orders, you have open positions and then open orders. These are where people have set kind of limit orders. It looks like there's kind of a big amount around the 3,600 line in order to go long. It's a buy order at 3,600. And it looks like you have kind of a bump out here. A lot of people have open orders to sell if the price ever reaches 3,800. So open positions, a lot of people shorted here. A lot of people went long here. So as this price moves up and down throughout the day, it'll give you a 24-hour summary. And you can kind of watch this. You can kind of watch this played out over time, and how it fluctuates. So it's a useful tool. It's a useful tool. Go to the graph of any of these different. It's a really useful resource, and it's definitely worth checking into it with the video tutorial. So the next resource is long and short ratios. Incredibly useful. Again, you can see that the euro US dollar is by far almost twice as much as any other currency pair. They're the two largest in the world. So where are people standing currently? Open positions. We've got a lot of long positions, and this just gives you an overall feel of where the market might go. If it tends to swing back and forth from long to short to long to short, and up and down and up and down. As the market climbs, people will start to short it more, and as it dips, they'll tend to go long. Not that they're always contrarian, not that they're always going against the flow, but it tends to hit those specific prices in the order book that we saw in the last resource. As the market tends to dip, people buy, and then as it climbs, people sell, and that allows it to make this type of a pattern like this. So that's that resource. Really useful just to see, if nothing else, that Euro US dollar is the largest by far, and then looks like a lot of people are shorting the Great British Pound, but then is a slight majority to the going long in the Euro US dollar. This will make a lot more sense as we continue with the training videos. Again, another video tutorial. Useful resources. A lot of stuff you can just expose yourself to, just look at, just study, and all straight from your platform. It's one of the reasons I like OANDA and their fxTrade platform. Market hours. It's just a nice, handy tool. If you watched the video, the 5 W's of Forex, kind of went over this. But this is a tool. This is a live update tool that you can kind of interact with. We're going to go to Mountain Standard Time, GMT -7, and it'll give us where we are currently. But if you hover over it, it'll tell you that it's going to open up at this time on this date. It'll open up at this time local, when you're putting your time zone in, and just kind of a nice tool if you just want to check out the time zone, do a little time zone analysis, especially with historical hourly trade activity. Now, it's not giving you this specifically, I don't see, for a specific currency, but maybe just overall. If there's more trade activity during these times, which I don't know actually what that corresponds, 7, 8 a.m. I don't know if they're linked. I think they are. It's not giving me any feedback there, but this will just say increased volatility around these times, which that should be 7 or 8 a.m. local. It's currently 2:31 a.m., which is interesting because my time says 3:31 a.m. It's a useful tool to see at least these two things, and also to understand how the markets move, how they overlap, when they open up, and when the crossovers. It's a useful tool, useful resource. Next on the resources is the account calculators. So all of these calculators will be kind of like the pip profit calculator. They will be a number of, I guess, what if scenarios. Margin call. What if my account currency is this, my currency pair is this, the current price is $1 US dollar to US dollar, and let's say I go long and my margin ratio is 50-1, my account balance is 1,000, the number of units I've traded is 20,000, then I can calculate what the price would be if it went against me. It would have to go against me this far, and I would lose this much money in a margin call. How to use the tool gives you an overview. Once you get more into trading Forex, and you're not just playing around, practicing, doing extreme kind of strategies with super intense leverage and full in on one position, and you get kind of a robust trading strategy. This calculator, it's handy to have, but you should not be close to getting a margin call. It might happen if you have an open-ended trade that you have no stop loss on, and you have no planned exit in a loss. You might need to calculate how much loss you can actually take before it gives you a margin call and closes out your position for a loss. And here's the tool to do it right here in the resources. So the next resource, another account calculator, would be the trading profit. So the first one, they'd say loss. The next one is a profit. If this and this and this and this, the action is buying, and I buy, let's say 20,000 units, and then the closing price is 1.36338. What would be my profit? And it would be $20 profit in US dollars. So it gives you, how to make your assumptions, and then you're basically asking it, if I did this and this happened and I traded this amount, how much could I make? And that's actually a really common question that I get when I'm talking face to face with new traders. Well, how much can I make? And the answer very bluntly is it depends. And these are all the things it depends on. What currency pair? What's the trade price? Are you going long or short? How many units? And this is actually the biggest dependent, is how many units. And then the second largest dependent, and if not more, is your open and then your closing price and which direction you went. And that is all of the stuff that it depends on. One of the things that it doesn't take into consideration, and you can see this calculation in the formula base, for example, suppose, just like this is a supposition, suppose all of these things were true, then your profit would be this, and this is how we figure it out. How to calculate it, another article on it. So these are tools, if you want to figure out and really understand the mathematics behind it. At first it may seem really complex, but once you get to the other side and you've really got a grasp on it, it actually is really simple. It's just the difference, right? So I'm going to sell here. You can see this. It's just the difference between where you entered, where the market currently is, or where you exit. And that's part of this game, is your exit's not fixed. You get to define when you enter, you get to define when you exit. So when you ask the calculator this, how much can I make? What's my trading profit or loss? You're putting in all of those variables. One thing it doesn't take into consideration is, again, the spread. And that spread may jump up, or it may be really narrow at the time that you actually exit your trade. And that will affect the amount that you actually make. So it's a good resource, and it's also a good learning tool if you just want to practice putting in different numbers until you kind of get a feel for it. Go ahead, use that resource. Another account calculator is the spread cost calculator. A lot of ifs again. Trading activity, 5 deals per day. This is a bit of a different calculator. And it says, it kind of really lines it out here. The impact of the spread on trade profitability is often overlooked. Going from a 3-pip spread to a 2-pip spread may not sound like much, and going from a 2-pip spread to a 1.8-pip spread may seem even less significant. But in both cases, depending on your trading style, the impact on profitability can be huge. And let me just tell you, you can play with this calculator for a long time. really it's trades per year, trading volume that affect it. If you're only doing one trade a year, obviously it's not going to have as large of an impact if you increase or decrease that spread as if you're doing 5 trades a day. So just a little spoiler alert, the more you trade, the more the spread has an impact on you. But play around with the calculator, check it out. It's a great resource. Understanding the numbers, especially this final output of your return improves by when you use separate pip calculations, 3 pips versus 2 pips. And if you wanted to see, a 5 pip versus a 2 pip, you could calculate that out. And your return improves by 375% just making 5 deals per day. But let's say it's per month. It's only an improvement of 18%. So that's kind of the spoiler, right? Is the higher volume you have, the bigger an impact the spread makes. But check it out, play with it. Next resource, account calculator, interest. Another great tool. I played around with this for hours, trying to find the best carry trade. A carry trade is simply a trade that you get into to exploit the interest rate differentials and profit from that just by holding on to the position. We could dedicate a whole lesson to carry trades, number of lessons actually. For a while, the Australian dollar, Japanese yen was great because the lend rate and the borrow rate were so fantastic compared to each other. Basically, you could earn, I want to say it was around 17%, and then when you include leverage into that, the actual realized amount into your account was something closer to 70% a year, which is phenomenal growth just by holding an Australian dollar Japanese yen position in the right direction. And if you wanted to sell, and right now it's at 2.9 and 0. So if you looked at this and you said let's say we did 50,000 units and we held that just for, let's say, 24 hours times 180 gives us 4,320 hours. So this is half a year, 4,320 hours. Maybe I'm looking at that wrong. There we go. So half a year, 50,000 units gives us $429.26 in interest, meaning every day a small portion of that is actually getting deposited into your account. And it's not dependent on whether the price goes up or down. It's only dependent on the interest rate. So play around and look at different interest rate calculations. I want to say I went through the entire list and did a huge spreadsheet on current prices about 2 or 3 years ago. And interest rates change, and they're open to change anytime. And usually that's a pretty big news event when an interest rate does change. So the next resource or account calculator would be a margin calculator. So this is great to understand leverage. Your margin ratio is 50 to 1. The current price of the euro or dollar is. And the number of units. If you want to say we're going to trade 20,000 units, how much margin do I need to have in my account? Well, without going into a huge lesson on margins and account requirements and leverage and all that, basically, very basically, this calculator is telling you how much you need to have in order to cover that many units. If I wanted to make $1 million trade, I think that's a million. Yeah, $1 million trade. I would actually have to have, is that a million? Yeah. I would actually have to have $27,247.60 in order to cover that. And beyond that, I would be in danger of a margin call. Now, if you just did 1-to-1, the current price of whatever instrument you're looking at does make a difference, and you can see that that's pretty identical. If you wanted to make $1 million trade, you actually have to have 1,362,380, and the reason for that is that number there. It increases it. That's the exchange rate. Now, if you wanted 5-to-1 leverage, this is how much you have to have in your account, so on and so forth. We stick with 50-to-1 mainly because it requires the least amount of margin, but we don't ever use full leverage. We don't leverage our accounts out fully. Maybe we'll do like a 10-to-1 leverage. So with the $1,000 account, we'll be trading 10,000, and it only requires 272 in your account. If you were doing that at 5-to-1, it would require 2,700, so on. So that's what the margin calculator is saying. How much do you need to have in your account in order to make the trade with this currency pair, this number of units? That's what it's saying. It's a great resource. Also, just to try out, just to see, how margin works, and playing around with different numbers may help you learn that a bit quicker. The next resource is, and the last, is the units calculator. And this very simply is the number of units of a currency pair that you could trade with your available margin. So 50-to-1, the margin available, we'll say, is 1,000, and the euro US dollar with the current price of X allows us the max amount of number of units is 36,700. So when we trade a 10,000 unit trade, that's nowhere near the maximum amount that we could actually trade. Another easy way of doing that is by using the one-touch system and that extra tooltip that comes out. Units available will give you an updated amount based on how many open positions you have and how much margin you have left to trade. So again, a lot of really in-depth information just with these few buttons, but it also gives a great exposure. Each one of these things, there were points that were required for you to understand basically before we can even explain the tool or explain the setting. With the window, bring all to front, minimize all, close all, very, very straightforward with those. They're just talking about the platform window. Bring them all to the front if you minimize all of them. If you wanted to open this chart in a new window, and then you wanted to go back to that window, it makes it available. Another way is breaking this out into a new window, and you can then bring all of those to the front or minimize all of them or close all of them. and they're just talking about breaking out these different windows that you might create. Um, uh, one of the easiest ways of getting multiple data on the screen at the same time is by kind of creating these separate windows that aren't the base platform, and then organizing them that way. So the window tool is incredibly useful. Also, help, you got keyboard shortcuts. Here's all of the things that you might want to do quickly. If you're given to keyboard commands, and as you progress as a trader, you might want to just execute some of these straight from the keyboard without having to go over and click on something and add this and do that. Allows you to open an fxTrade account straight from your practice, and it'll take you right to the window to allow you to set one up. Trading documentation and help. Requirements. Let's get started. Lots of information here. OANDA's policies. Something nice to look through. How they calculate interest, the hours of operation, their margin policies. Just to know in the back of your head what they are. The contact us. Primarily, it's through email, but when the market is open, they also when their phone lines are open during their hours of operation, they definitely accept phone calls. I've had to call them multiple times when accounts get locked out for students and things like that. So really, really great customer service. So here's all of the release notes if you're into seeing the changes on the platform. About OANDA, what their mission statement is, about them and their fxTrade platform. I guess kind of a credits type of a scrolling screen here. If you wanted to open up your JavaScript debug window, if you're kind of computer savvy and you wanted to look at something that happened, maybe you experienced a glitch or something strange, you can always send this log or report a problem using this button. It'll go straight to OANDA. And then also report a problem. We don't want to report any problems. We didn't have any problems. So just with these buttons across the top, we explain quite a bit. In the next video series, we'll be going through trades, orders, positions, exposure, activity. We've dropped down a number of these different I guess drop-down menus. We've experienced almost everything on the trading platform. Once you break it down into these different sections, lot of stuff to explain up here, especially on the periphery. If you don't have fundamental concepts down, if you don't know what your trading platform does, if you don't know what its strengths and its weaknesses are, you can't ever grade it. You can't ever engage with it fully. And so this is kind of a long video, but if you're still here with us, thank you for sticking around. Also, we do have a Facebook page where we engage regularly with anybody interested in Forex. Also, on this video in particular, if you have questions, I monitor the comments regularly, so if there was something that maybe I made a mistake in, or if I didn't explain it thoroughly, either look out for future videos, or maybe watch it again if it didn't catch with you the first time, watch out for future videos. And if I'm not answering it timely, and I'm not answering it in the comments, just check out the Facebook, and we stay in contact with that and Twitter regularly. So the idea here is to build a community of traders in a kind of a different platform. There are a lot of forums, there are a lot of different ways you can engage with Forex. This idea is to take someone who has no experience trading, investing, and take them step by step by step through what you need to do to set up and go to execute your first trade. And then beyond that, also I do one-on-one coaching. If you're in the Colorado Springs area, you can look us up. We're the Forex Trading Academy. Send us a message. And that's kind of the gist of it. We went over just these buttons, and it takes a while. It takes a while. The fastest way to learn is to engage with it. What does it do when I click this and this? What is that? What are these things that I'm looking at? What is this chart? What are these indicators that what is momentum? What am I adding? There's a lot that goes along with this. So what we want to do is basically cover all of that. And because there is so much, we have a lot of work ahead of us to get from point A to point B, where if point B is consistent profitability and point A is I've never heard of this, there's quite a bit in between that. If you stick with it, I can't guarantee you specifically profits, but if you stick with it, you will have a skill that could be potentially life-changing. This market offers a lot of opportunity to make money, and it doesn't appear to be going away anytime soon. So get into it, and that's what we want to show you, is how to do that, how to get into it, and how to make money trading in the foreign exchange market. So again, thank you for watching, and please write your comments or your questions, and I'll answer them as quick as I can. Thank you.